Hey, Kyle here with winthehouseyoulove.com. Today we're talking about what are prepaid costs when you're buying a home. Closing costs and prepaid costs and everything that goes into the costs and fees of getting a home loan can be confusing. So we're going to break down what prepaid costs are so you can have a better understanding moving forward when you look at these loan estimates. So first of all, let's talk about what prepaid costs are. They are the costs related to purchasing the home and not due to the transaction. So it can be a little confusing. It relates to the house, not the transaction, meaning that whether you have a loan or not, you're going to have prepaid costs, right? So these are the costs that are associated with getting real estate, no matter if you're using a mortgage or you're paying with cash. So prepaids are directly connected to the property. Closing costs are directly attached to the mortgage, right? So getting a mortgage, getting a home loan is going to require fees. Getting a home is going to require fees. So we can put those two together. We have prepaids and closing costs. So basically what we're saying here is no matter if you have a loan or not, you're going to have prepaid costs here. So there's two ways that this is broken up on your closing disclosure. And the closing disclosure is the disclosure given to you by your lender that's going to detail all of the costs of your loan. It's going to be broken up into loan costs, which would be closing costs, and other costs, which would be your prepaid items. Loan costs are directly attached to the loan. Other costs are directly attached to the property. So let's talk about some different types of prepaid costs that you'd have here. So number one is 12 months of homeowner's insurance. So if you're getting a mortgage, you need to pay that first year up front. If you're paying with cash, you don't have to pay a full year up front, but it might be a good idea to do so. So 12 months of homeowner's insurance paid up front. You also have prepaid interest. Prepaid interest is from the time of closing until the end of the month. Okay, so that's because mortgage interest accrues during that time and mortgage payments are paid in arrears. So you kind of quote unquote skip that first payment, but you pay interest from the time of closing until you're up until the end of the month. Also, any upcoming tax bills. So this would be if you have maybe a semi-annual tax payment coming up. Let's say it's due July 1st and you're closing on June 30th. Well, that bill is going to come up when you're the owner of the property. So you're going to get a tax bill for that. Normally, you're going to get what's called a proration credit from the seller if you are having to pay an upcoming tax bill for the time when you weren't in the property. Also, you have HOA dues. So this is going to be dependent on if the home you're buying is in an HOA. If it is, then you have HOA dues, and that's set by the HOA. And if not, then great, you don't have an HOA. Something else to watch out for with HOA is sometimes you have to pay to get the documents from the HOA, and that can be really costly sometimes. Sometimes these HOA companies really gouge you on costs. I've seen sometimes where getting information from an HOA is $200, $300, $400. It can be a little crazy. You also have recording fees. So recording fees are things like that the local government would charge to record the deed and the mortgage. They might have some taxes that go along with that as well, but they're going to get paid to be able to pull the deed together in an online website and actually record it. You also have transfer taxes. This is not in all states, but some states have transfer taxes that are paid by the buyer, meaning that when property transfers ownership, somebody has to pay the taxes on that property. Usually it's a seller, sometimes it's the buyer, so something to watch out for. And then escrow. Escrow is basically where you have taxes and insurance paid by the lender. It means taxes and insurance are put into the monthly mortgage payment for you. And then there's an account set up, what's called an escrow account. And it's a couple months of insurance and taxes. And that cushion is there just because in case you're ever behind on a payment, that taxes and insurance are always current. So out of all these, the main one that you can negotiate is your homeowner's insurance, and that's because you get to shop for your homeowner's insurance. Okay, so this should give you a really solid idea here of what your prepaid costs are when you're purchasing a home. If you want to learn more about escrow accounts, go ahead and click over on this video over here. It's going to help you understand more about escrow accounts and if you should have one or not.